Good morning and welcome back to Trading Options Network. Do we have a doozy of a day so far? Before we get into anything, of course, let's go ahead and get into our disclaimer here. Everything we discuss is solely for educational purposes only and is not the opinions of Trading Options Network. That being said, with the information, do with it what you will, but take responsibility. Also, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with Trading Options Network. All right, that being said, like I said, today we have a doozy. Our beautiful S&P chart here is very ugly, to say the least. All the biggest companies, super red. Semiconductors specifically. I mean, my goodness, how Intel's at, almost 4%. It's kind of mind-boggling, but whatever. We have Nvidia down over 5%, Micron's down over 4%, Broadcom. I always forget that AVGO is Broadcom. Down almost 5%. Advanced Micro Devices down almost 8%, Qualcomm almost 7%, Microsoft over 2%, Apple almost 3%, Google 2%. Meta, obviously known as Facebook, down over 4%. Eli Lilly down here almost 3%. This is insane. Schwab is getting its butt kicked. I didn't even realize that. I don't know what happened there because they already had their earnings. Well, we could look and see if later on our own, if they had any more news that has come out. But bottom line, again, there's a lot of big companies that are down a ton. Now, previously, of course, I was saying that, I felt a lot of people were just reallocating their assets. They were selling their winners, while they were up, and they were going to be moving their money into different stocks. They could still be doing that, of course, but that's not what's triggering this red market right now. There's actually a few things. For example, in the UK, inflation's back up. The Japanese yen is stronger against the dollar right now. And then, of course, and I hate this. I hate it with a passion. I don't care if you follow specific people or not. I hate the fact that one person can open their mouth and have such an effect on the market. But Trump came out about and said something in regards to the semiconductor industry and getting their chips and things of that nature. And that's obviously a reason why the semiconductor industry as a whole is getting smoked. But yeah, the fact that one person come out and say stuff, i.e. Jerome Powell, the president, former president, what's her face? I can't even stand her, but that Congresswoman from California, I don't know, I can't think of her name, but I'm sure you all know who she is. The fact that she can come out and, do stuff and buy a specific stock, and when she buys the stock, it seems like everybody follows suit because a lot of people, of course, I'm not going to, maybe it's better that I don't remember her name, but, a lot of people will accuse her of insider trading, but whatever. You didn't hear that from me. So, bottom line, today's a doozy of a day. That being said, while the markets are getting smoked, mainly because of these bigger companies, there are still a lot of companies out there that are doing well. I'm not going to be even opening up the screener. I don't even want to look for trades right now. This is one of those times, as I was mentioning yesterday, it's okay not to make trades. And did I expect anything like this? Of course not. But let's go ahead and take a look at our trades because this is one of those days it's like, oh my gosh, make it stop. SOXX, we're getting absolutely hammered today because it is the semiconductor ETF. Go figure. 2 days before expiration and boom. So that's a very tough pill to swallow. We went basically from a max gain to almost a max loss, but we still do have a couple of days left, and we'll probably end up rolling this trade because we're not going to just go ahead and let it die out right now. But if we go ahead and look at the chart, in all reality, We're still in it did drop below the 20. You can't argue that, okay? But it is still above the 50. The chart itself, from a technical analysis point of view, is still not terrible. Okay, it's not great, but it's not terrible. And this could very easily, reverse with, especially considering we have this small company called NVIDIA that pretty much leads this entire ETF. Whatever NVIDIA does, this ETF is going to do. So if we go ahead and look at NVIDIA right now, it's just in the pullback. But check this out. We're still here over this. If we go ahead, I can't really make a line here. I mean, I can, but I'm not going to. What the hell, I'll do it anyways. There we go. So if we go ahead and draw this line, okay, right about there. All right. We're still above it. And it could very easily, and coincidentally, I didn't even realize this until I drew that line, so it's probably a better thing that I did draw that line. Coincidentally, this line is meeting the 50-day moving average. So what does that mean? That means we are going to have a ton of support. And I'm actually going to add NVIDIA to our bull watch list because, again, it's one of those companies that if it starts going green, especially at this level right now, people are going to go ahead and buy it like crazy. I can almost guarantee it. So we can easily expect a bounce if that were to occur. So I'm definitely going to keep an eye out on NVIDIA right now. And then if NVIDIA does that, what is going to happen to SOXX? Well, obviously it's going to follow suit. See, SOXX does have, coincidentally, a lot of that same support, also right at that 50 period moving average, a 50-day moving average. So I'm not done with this one yet. It's a painful day. There's no doubt about it. We are going to have painful days as traders. I mean, just to go up $1,400 to down $1,000 on one trade overnight because, a specific politician said something that went against what we would like. I mean, it's like, hey, why couldn't you wait till the weekend? Maybe he had SOXX puts. Who knows? But the bottom line is, again, things like this are going to happen. You have to shake it off. And continue moving forward. Now, RCL, Royal Caribbean, most people in our position would start panicking. I love diagonal spreads because of this exact thing. If we go ahead and look at this, okay, let's go ahead and open up RCL really quick, the chart. Obviously, we are still very, very bullish. Now, what happened here? The great thing about this is that this is going to give us an opportunity to roll our 170 calls into next week's 170 calls, which have a premium of, we'll call it 280, okay? So in fact, we're going to do that right now. Let's do that right now. Let's roll that position. Okay, easiest way to do it is come down here. You know what? As much as I like to do it, no. We're not going to do it quite yet. And the reason why I didn't realize the current mark right now is still 79 cents, 80 cents. That's a lot of premium. That's probably going to die off here in the next couple of days. Whereas next Friday's is not. So let's go ahead and take advantage of this. That is all going to be going into our pocket first. I was expecting it to be lower, honestly, when I said we're going to roll it. But bottom line, let's hold on to it for now. Let's let this die a little bit more. RCL, would love for it to just stay flat. It looks like it wants to bounce a little bit. Although I know that shadow, that wick, is mainly from this morning. It is not... I wouldn't necessarily say it is bouncing back. I mean, it's not that it's continuing to move down right now. It's not. Okay. I stand corrected. When I looked at it a little while before the video started, we were still up here. So I just assumed, I didn't realize we dropped down that far. Wow. Okay. So, I mean, nothing's changing, of course. Nothing's changing at all. we are going to let our short legs continue to be crushed by theta. And then probably on Friday, we will go ahead and roll that position, assuming, RCL doesn't fall off the table completely. Now, if it's all of a sudden down at like 163, 164, let's go ahead and open up the day chart one last time. In fact, I'll just go ahead and do this. It's just easier. All right. So, we could literally go down to about 160. I would even argue, I'd say, the 163. If we drop down to 163, then I would say, hey, we might want to, and it goes below 163, I should say, then we might want to get out of that trade. But until then, I like this trade, okay? The reason we do diagonals is because we want to actually profit more from these short calls that we are going, or short puts, depending on which side you're on, but in this case, short calls. We want to profit from those short calls, that theta that continues to just dwindle down. So again, at the end of this week, we can roll these short calls into next week's short calls and get a whole new set of premium against this. Now, we bought this for $605. We do that 3 times at $2 each. It pays for these. And then on top of that, if we do end up towards that 170 level, then 1, this will not go down to 0. 2, we would have made a ton of money from these short calls, so we'd be looking very, very pretty. So RCL still looking great, even though if we simply just looked at, I don't know why it says the profit and loss on the day for RCL is 1,500. Clearly it's not. There's something going on with that, some kind of bug in Thinkorswim. But even though we are only up now 272 compared to where we were yesterday, we're definitely not in panic mode. COHR, that's another painful one. But again, we still have 30 days till expiration, I think. Yeah, 30 days till expiration. We look at it. We're still right in these two. Gosh darn it. There we go. We are still, not only are we in between, we're still in the upper half of them. Okay, so we're still fine. It looks fine. Okay, remember, we were saying $74 would be the area where we'd be looking to sell. We're nowhere near that yet. It's taken a drop. There's no doubt about that. But we have 30 days. This could very easily be a one-day pullback. And then, look what happened back here on July 9th. That was what was that? Again, I don't see the percentage, but gosh, let's get back over there. The open was 77.24, close is 75.11. Okay, all right. So, that was a decent red candle, but look what it's done since then. Okay? It's done a lot. That was almost a 3% loss that day. And that's after it gapped up. So, technically speaking, while the loss itself, based on that specific day, may not have been a ton, when it gapped up and then sold off the way it did, you would think that'd be a very, very bearish signal, especially with an engulfing candle like that. That's nasty. That is nasty. But it bounced right back. We could very easily see that again. Tomorrow and next week and so on and so forth with the stock. Now, at the same time, I'm saying that's going to happen. It could very easily just roll over and continue to die, and then we have to be like, why me? No. But bottom line again, we're still in a fine situation with this one. And again, this is a painful day to look at, but these days happen. We just got to shake them off and continue to hold strong on our strategies and our positions. ALB. Okay, that's the other one I wanted to talk about. So ALB, if we look at this, it opened up strong. And I'm not going to lie, it made me a little nervous. It did go over that $98 price point, but since then has been absolutely dying. I'm not surprised at all. Again, I mentioned it yesterday. There's no reason to believe, just because we had a good day yesterday, that we are out of this bear trend. This is nasty. This is a huge sell-off, and it's consolidation, and it is struggling to get up and stay above that 20-day moving average. Today was the best opportunity it had to stay over that 20-day moving average and completely sold off. So again, we can easily see that hit 90, our price point in the next few days, relatively easily. I mean, we're down 3% from the highs of the day right now. And overall, we're down about 1.86%, it looks like, from yesterday's close. So again, this is nasty. This is not good for this stock. Again, with these Bollinger Bands starting to squeeze a little bit, we should expect a move in one direction or the other. And if it's going to fall apart now, when it had this opportunity to move up and it could not attract more bulls, then again, I'm feeling more bearish on this one. I almost closed some of the short legs on this one, these 6 short legs that I have here, but these 90 puts, I almost closed a couple of them just to change it, but then I had to really kind of tell myself, look, those are the $90 puts, 90 strike puts. We're still, over 5% away if you count the stock price where it's at right now, but from where it opened up today, it's still, that's a huge drop from where we were. So I'm not totally sold that we're going to pass $90 by next week. If we do, good for us. Good for us. We're going to crush it with these 95 puts. The 90 puts, maybe we won't profit as much from them, but that's fine. We'll still profit hopefully a little bit. Truth be told, if we look at 90 puts, we opened them at $1.25. So our break-even point on these 90 puts would be $88.75. How do I get that? You take 90, subtract $1.25. That's $88.75. So as long as the stock is above $88.75 by next week, we'll be profitable with these legs. Now, would I love for it to go past that? Yes, because we still have 6 95 puts that are not, for lack of a better term, capped for profit from these puts. So if it went down to 80, for example, I'd be loving life. Do I expect that to happen? No, of course not. But I'm just trying to make a point here that with our 95-90 ratio spread, we will want this to go down as far as possible. Whereas if it's a straight vertical spread, if this was 6-6 or 12-12, once it hits 90, anything below that, we are putting a cap on our profits. It does not matter. But with a ratio similar to, this is closer. Basically, a ratio spread is made up of a vertical and straight calls or puts. In this case, puts. So we have a vertical spread plus additional straight puts in this situation. So our vertical spread, our 6 vertical spreads, will be capped out for profitability at, once it passes or goes down, I should say, that 90. But the other 6 straight puts will continue to profit if it goes down past 90. So ultimately, when I opened this trade, I did not expect this jump right here. So again, I almost decided to close a couple of those short legs, but I didn't. In the meantime, pardon me. In the meantime, all we want to see is this continue to drop. And we have a week and a half roughly to do it. So those are our trades that we currently have right now. We only have those 4. It seems like a few stocks, ALB is continuing to drop, it looks like. Coherent Corp is still a pain in our butts. RCL is still right there. SOXX seems to have, looks like it jumped because we're up almost 250 from, or almost 300, from when we started. So this would be phenomenal if it did jump a little bit. Let's see. Well, go figure. It looks like it may have started to, but now it's going back down. Yeah, it started rallying, and then it got to hit that 50-day, man, and just sold off. But hopefully we can see this. I mean, overall, it looks like it does kind of want to start moving back up. Again, this is run or led by NVIDIA, which is a psychotic stock. So as long as NVIDIA is looking like it doesn't want to continue to die off, then I'll be happy with SOXX. And if we have to roll it once, then we'll roll it. I wouldn't be worried about that. Overall, again, we'll probably even open up a position on NVIDIA if it bounces hard here, and it looks like it does want to. Let's go ahead and take a look at this one a little bit closer. Yeah, so it's just passing the 20-minute moving average right now. Again, I don't put a lot of weight into that, but a lot of day traders will. And if this is going to push higher and higher and higher, then heck, we may see this creep up towards that 121, 122 level. And that would actually be quite bullish for the stock. Excuse me. Man, why do I always seem to have the hiccups when I'm doing these? Apparently I need to bring more water. But if we look, the stock opened up today at 121.35. So yeah, if we got to that 121, 122 level, and we finished the day higher than what we opened at, then you have to assume that is a pretty good buy signal. In fact, we'll see what it looks like at our 2 o'clock trading. Maybe we do open up a position on NVIDIA because, again, it's one of those stocks that will have a lot of volatility, but when it moves your way, it can move and move fast. So that being said, I don't have anything else to talk about with the screening unless NVIDIA and just hit 120. Oh, just went back down. Unless NVIDIA, though, does come back up, do not expect any trades today because the market is definitely having a big reaction day to a few things that are happening. And I would be lying to say I'm not a little bit nervous. And when I say that, I'm referring mainly to the overall sentiment of the market, the bullish trend that we're in. Do I think it's going to collapse? No. But based on what has happened today on just a little bit of information, if we get a couple more things fundamentally that go against it, and keep in mind, we are technical traders, or at least I'm a technical trader, and if you're following me, you're probably a technical trader as well. We don't look at fundamentals as much, but sometimes you can't ignore the fundamentals. And what I'm referring to, I'm not talking about, fundamentals of trading. I'm talking about fundamental analysis. Sometimes we do have to pay attention to that fundamental analysis because it'll trump technical analysis if it's strong enough. So we do have to keep an eye out. And if the fundamentals starts overtaking the technicals, then that is when I do not like to trade. Because again, I'm not a fundamental trader. I'm a technical trader. So I will wait for the technicals to start taking over again. But until that happens, I'm just going to kind of stay put. If I see a good opportunity with, say, NVIDIA or any of these other companies, God, look at, oh my gosh, I didn't even see this one. Let's take a look at that one really quick. This one's getting smoked. This was one of our bulls that we really, really liked, Applied Materials. That's right. We were looking at this one. It got smoked. Coincidentally, the 50 and the lower Bollinger Band are at the same spot, so that's a lot of support for it. Gosh, Adobe. Although Adobe, that's actually a pretty good candle there for Adobe. The fact that it went down to the 20, hit it, and has bounced back mainly. Apple is another one. It's a nice little pullback there. We definitely have, technically speaking, we have a lot of nice setups, but that does not mean we're going to jump into opening these positions. So once we do see good confirmation that we can get into those positions, I honestly can see myself getting into a lot of positions quickly, because this does seem to be technically, from a technical analysis point of view, this appears to be a time where a lot of stocks are giving you good setups. They haven't confirmed, they haven't triggered, but they're setting up for a lot of good trades. So again, we're going to just have to keep an eye out, see what happens, and ultimately be on the winning side. So that being said, I'll see you guys in a few hours.